What's up everyone, it's Caddy with MoneyVest. So in this video, we are going to be talking about HIMS and HERS, a stock that you guys have been asking for a very long time. And first things first, I do want to apologize for not going over this company before. Honestly, I've just been too occupied with so many different projects that I've taken on over the last 3 to 4 months here. And the stock, of course, has ripped over 150, close to 200% from its lows. So first and foremost, I am sorry for not covering this earlier for all of you. But this has been a stock that has been widely discussed in our community, in our Discord, and a lot of people on YouTube have been asking for an analysis on this company. So here it is. I'm going to break down everything you need to know about this company. This is in the telehealth and healthcare providing and sexual well-being and awareness sort of space, and it's using digital technology to create that subscription model to offer the care and the wellness that people need in the United States, the UK, and internationally as well. So hope you all enjoy this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below. There is a 16% annual discount that is available until the end of this month. So there's a few more days left if you want to take advantage of that. And again, you get access to all the members only private videos, all the trade alerts, trade ideas, options alerts, as well as our monthly, actually weekly newsletters, as well as the TradingView charts, and also the MoneyVest.com website that we're going to be launching here very, very soon. That's going to be available for members only. So links going to be down below and we'd love to have you on board. If you have any questions, feel free to reach out. So HIMS and HERS since October of 2022 is up over 300%, but more specifically, I want to focus on this October 23 when it was trading at 562. It is now up a little bit over 200% from those levels. So again, a massive gain. And HIMS and HERS operates in the telehealth platform that connects consumers to licensed healthcare providers. And essentially, they operate both from a subscription model to actual selling of vibrators, lubricants, sexual health and wellness specialties, shampoos, conditioners, scalp scrubs, and tropical treatments, and a lot of other products in the well-being specialty categories, including moisturizer, cream, sunscreen, serum, face oil, and face wash in the skincare specialty as well. And the company offers a range of curated prescriptions and non-prescription health and wellness products and services available to purchase on its website and mobile application directly by customers. So again, they are digitally enhanced and they don't need to actually have physical locations like Walgreens or CVS. Everything is done online, hence why they're considered telehealth. You can have consultations with professional healthcare providers and again, on video or on audio to kind of explain your problems, and they are going to be there to help you. It also provides prescription medication on a recurring basis and ongoing care from healthcare providers, and over-the-counter drug and device products as well, cosmetics and supplement products, primarily focusing on general wellness, sexual health and wellness, and skincare and hair care as well. So company is based out of California, and it's been operational for several years, I think over 4 or 5 years now, over 1,000 employees at the moment. So let me just quickly take a look at when it was actually founded in 2017. So it's been about 7 years or so that's been around as a company based out of California. Now, this right here is the seasonality chart that I want to break down. And the first thing I want to address here is that November and December, the last 2 months of the year, tend to be the best month for HIMS and HERS in terms of performance, because the win rate is exceptionally good. We're looking at over 75 to 80% win rate with an average gain of about 10 to 18% respectively in those 2 months. I'm assuming because of the quarter that comes out in the earnings call, and they're usually reporting for the quarter ending in September. And that quarter, we're seeing a lot of progress, a lot of amazing numbers, and strong guidance for the fourth quarter, resulting in some pretty massive gains. 2022, 2023, we saw 48%, 36% respectively, and then 3.1% gain in 2020 as well. So again, 3 out of the last 4 years in November, HIMS and HERS stock has done incredibly well. Now, going into April, last April was actually quite strong, up almost 17%. But the prior years, it's been somewhat flat to down, anywhere between 21 to 6.4 to basically down about 0.3%. So it's a little bit up there, 2.7% average loss in the month of April. So that's something to keep in mind. But again, this is what's happened in the past. Historical price action does not warrant what's going to happen in the future. It's just a good sort of idea for us to get in terms of the win rate and, of course, the average gain or average loss as well. April and May are pretty low in terms of that win rate. June is a little bit higher at over 75%. Now, this right here is going to be that investor presentation for HIMS and HERS. So if you quickly break this down, this is a large addressable unmet market opportunity that they are solving or that they're tackling here. We got sexual health, 80 plus million estimated population that it's actually dealing with some type of sexual health issues, whether it's ED or PE or cardio, birth control, STDs, or libido. Then we got dermatology, 80 plus million, again, US population estimated. Mental health, not surprising, it is going to be much higher, over 100 million people in the US estimated population kind of dealing with this type of problem, whether it's anxiety, depression, insomnia, PTSD, substance abuse, whatever it may be that they are tackling, and they are connecting these individuals with the right people, with the right healthcare providers, so that they can solve these types of issues, which are very, very important. I mean, healthcare is perhaps one of the most important things in life. I mean, without your body, without your actual well-being, you're not going to be able to do anything, right? You're not going to be able to live your life to the fullest, and that's the problem that they are solving here. Weight loss, we've got metabolic disorders, insulin resistance, appetite control, digestion, diabetes, all those things that they are tackling here, and as much as 90% of applicable population yet to seek treatment in some conditions. Though normalizing and innovating, our platform can unlock solutions for millions of potential customers for HIMS and HERS. This right here is basically going over their personalized approach. So our approach is to remove barriers and provide access to better health that is approachable, personalized, and more convenient. And total subscribers at the end of fiscal year 2023, we're looking at 1,537. This is in thousands, so we're looking at 1.5 million, and that's a growth of over 30% here in 2020. Actually, over 50% growth compared to 2022, and 30% in 2023 is the percentage of subscribers using a personalized product as well. So success is derived from sound execution across 4 strategic pillars. We got a trusted brand, leading technology, innovative products, and clinical excellence. That's kind of like their core 4 strategic pillars here. And then users are rapidly adopting to personalized solutions across our platform as a result to access unique and effective solutions at compelling price points. So again, sexual health, men's dermatology, women's dermatology, that's why it's called HIMS and HERS. We got weight loss and mental health, and 30% of total subscribers using a personalized option, with 75% plus women's dermatology subscribers using a personalized option, and 100% weight loss subscribers using a personalized option as well. Now, this perhaps is one of the most important slides, which is essentially why we're seeing a significant momentum in the stock price. And that is because when compared to other telehealth companies, HIMS and HERS is gaining a significant amount of market share, and it has gotten up to over half of the market share in telehealth providers in the last 3 to 4 years. I mean, consumers are increasingly drawn to our platform, resulting in higher market share as we break down barriers with high quality personalized solutions that are cost effective as well. And then if you compare this to, again, BetterHelp, Curology, we got 30 Madison, we got Roman Health. HIMS and HERS just stands well above and beyond in this industry at 49% market share. And this right here, share of new observed customers between primary telehealth providers at over 54%. So over half of the new observed customers are going to telehealth, and thereby increasing their market share. So this perhaps is one of the most important slides that I found in the investor pitch deck. Recurring revenue model sets a foundation for strong revenue growth and margin expansion. We're looking at a 90% plus recurring revenue. So that's a very, very sticky business with over 75% plus gross margin profile, in less than 1 year in payback period as of fourth quarter 2023. Subscriber growth, as I mentioned earlier, 1.5 million. That's a 48% subscriber growth compared to last year. Revenue increase was 47%, so kind of in line with the subscriber growth here. And adjusted EBITDA margin growth of about 8%. That was a 6 percentage point increase in the fourth quarter of 2023. We're confident in our ability to execute across the 3 key priorities in 2024 to drive future growth and market share gains. This is leveraging AI capabilities, which again is the huge buzzword of 2024. Evolve and expand personalized solutions and treatments, and exceptional operational excellence and scale as well. So really, I mean, what it comes down to is, using a lot of the data that's out there, addressing their total addressable market with the help of artificial intelligence, with the help of a lot of structured data, and then also making it as digital as possible so that they can continue to keep up with their very, very high margins and, execute this entire idea and this concept at scale, right? The only way they can do this at scale is that if they do it through technology and take the help of some type of leveraging AI into the equation. So that's really where the focus is for HIMS and HERS, and that's what's going to drive future growth and market share gains as well. Now, if you take a look at subscriber growth and revenue growth, absolutely phenomenal. I mean, this is something that I absolutely love to see. We're seeing a consistent growth in subscribers, 1.5 million, and end of quarter single 30-day subscribers, we're looking at 295, and end of quarter multi 30-day subscribers looking at 1.2 million, 48% growth on a year-over-year basis. And this right here is the revenue. Again, very nice consistent growth. Online revenue, take a look at that. Online revenue is 237 million and wholesale revenue is just about 9 million, with this right here being 247 million total. And this, I believe, is the revenue per user, if I'm not mistaken. Yeah, so while maintaining strong revenue per average subscriber or user at $53, which again continues to be very, very stable and flat. Ideally, we want to see both the subscriber growth, and revenue per average subscriber growth as well. But so far, it's been fairly flat here over the last, I would say, 2 years since first quarter of 22. Now, both new and repeat usage power online revenue growth. So repeat customers are also pretty high. We're looking at a repeat customer, which is almost half of the customers that are generating the revenue. And new customers online revenue is coming in at 842 million. That's a total, but half of that is coming from new customers and the other half is repeat business, which again is a very, very good retention from HIMS and HERS. And this is translated into an ability to scale our platform at an attractive margin profile. So we're looking at, again, 83% margins. They've expanded those margins from 74% back in the first quarter 22 to now over 83% for the company. Very, very solid gains here. And free cash flow for the last entire 2023 was also pretty solid. So if you do the math here, we're looking at 17 plus another 19, that's about 36. Another 10, we're looking at 46, almost $47 million in free cash flow for 2023 for the company, which again is positive free cash flow. It's a pretty big deal. And that's exactly one of the reasons why I believe, HIMS and HERS basically saw such a massive move to the upside to well over $16 and rallied a little bit over 200% because of their stronger earnings and coming in with stronger positive free cash flows. If you take a look at their actual revenue scaled from 26 million to 872 million, so that's more than a 30x growth here for the company, and gross profits gone from 7.8 million to now well over 714 million. So that's a 10x growth, and operating losses continue because the company is spending a ton of money on research and development, selling, general administrative expenses. So total operating expenses are sitting at well over 741 million, which is much higher than their gross profit. So as a result, not profitable at the moment on a GAAP basis. And diluted shares outstanding has been pretty stable, I would say, over the last 2 to 3 years. But of course, it did increase in 2020 to 2021 from 35 million to 186 million. But since then, it's been mostly flat. So that's what we're going to account for when we're doing our estimates. And this right here is going to be margins. Again, 82% margins. Everything else is negative, rightly so, because the company is not profitable yet, as we discussed earlier. But the expectations are for the company to be profitable. And we're looking at 8 cents per share in EPS and growing that to 23 cents, 35 cents, 46 cents, so on and so forth. And we're looking at a growth rate of about 195, almost 200%. I think that's really what's being priced into the stock right now, as the expectations are so high with earnings growth of almost 200% with 50% growth in 2026. And this is exactly what I have mentioned before in my previous videos, is that right now you may see that forward P is at 210 and you might think to yourself, wow, that is crazy. I mean, just if you take a look at the forward P here, this stock would be an absolute no, I'm not interested. But take a look at what's happening in the following years. It's going from 210 to 71 to 47. I mean, that's about a 75% drop in price to earnings in just 2 years. When companies turn the corner towards profitability and they're able to scale earnings so quickly that they go from 8 cents to 35 cents, and that's over, 300% gain in earnings per share. That's how quickly the earnings multiple drops, right? And that's what's going to happen with, let's say, Palantir, for example, or even recently, I think we did a video on, I forgot what the company name was, but SoFi, right? So SoFi, we talked about it as the company's turning the corner towards profitability. That's what tends to happen, is that they are, moving to not being profitable to somewhat profitable to now very profitable. And as a result, the earnings multiple does drop very, very quickly. That's exactly what happened with Tesla when it eventually did become profitable here. Revenue expectations from $1.2 billion to a little bit over $3.3 billion here. So that's a reasonable growth. And then finally, valuation, as I mentioned earlier, 210 on a gap basis, forward basis is high, but the company is also expected to generate almost a 200% growth in 2025. Price to sales, we're looking at just under 4 to 2.9, and price to book, we're looking at just over 10, and cash flow sitting at over 28 to 47 as well. So if you come over to my entire spreadsheet here, so let me just quickly break that down. I'm just going to bring that over here. We're just going to do some very simple analysis on HIMS and HERS to better calculate what the intrinsic value might look like. And I'm actually going to be using a discounted cash flow model to better understand what the intrinsic value might look like today instead of an earnings model. We're going to use both actually. So let's just go back. We calculated around $47 million in free cash flow for 2023. So if you come over here, we type in HIMS. This is the discounted cash flow model. We're going to plug in, let's say, $48 million in trailing 12 months free cash flow here. And if you apply a growth rate of 25%, or let's just go a little bit higher, 30%, 12% discount rate, 4% margin of safety, 4% terminal growth rate, 10% margin of safety, 0% share dilution, we're coming in at $6.78. But I know that free cash flow growth is going to be much higher as the company scales and it actually becomes more profitable. So ideally, I mean, the next 5-year growth rate for free cash flow is, should be higher, right? So if you're looking at this sensitivity grid, you can take a look that, okay, right now the stock's at $16. And if you take a look at where it would be the highest, let's just increase this number up to 40 just to play around with these numbers a little bit. So $16, right? So we need to basically ask for a 50% growth rate, meaning that HIMS and HERS need to grow free cash flows by 50% for the next 5 years. And also, beyond those 5 years, grow at a 5.5% terminal rate. And only then it's going to be worth $16.75 today. So if you watching this video believe that, okay, HIMS and HERS is actually going to grow its free cash flows by over 50% compounded annually for the next 5 years, and then beyond those 5 years, it's going to grow at a terminal rate of 5.5%, then today's value is appropriate for HIMS and HERS. But ideally, that's a very, very optimistic and bull case scenario, and that's not something that I would want to bet on. So what you really want to do is go conservative, right? Just like I have, let's say 30-35% here is much more reasonable, and a terminal growth rate of 4%. And it brings us down to $8, and that's after accounting for a 10% margin of safety, meaning that HIMS and HERS would need to basically get cut in half in order for it to make sense at these prices for us to be buying. Now, if you take a look at the earnings multiple, and if you simply do the math here, so 0.08 cents per share is the actual earnings per share times the share count, right? So if you come over here and take a look at the share count for HIMS and HERS, we're looking at a diluted share count of 209 million. So we're looking at a net income, right? Actual net income of about 17 million or so. But the earnings expectation for 2025 is 23 cents. So 0.23 times 209, we're looking at, again, $47 million in net income based on 2025 numbers. So if you come back to our calculators and come over to the 5-year discounted earnings model, and if you type in, again, HIMS and HERS here, and again, that's going to be 48 million. That's 2025 net income, by the way. I'm not accounting for 2023 or 2024. Ideally, I should be putting in 2023 net income, but the company was not profitable, so I can't put anything in here. 48 million for 2025, and let's say that we apply a growth rate of 40%, and we apply a 25 times P multiple, which is quite reasonable. 12% discount rate, 10% margin of safety, and 0% share dilution. We're looking at a fair value of about $15, which only makes HIMS and HERS undervalued by about 6% here, right? So that's actually not bad. If you go a little bit conservative, 30% growth rate, now we're looking at $10.62. So that's a 35% downside potential needed in order for HIMS and HERS to be trading at its intrinsic value based on the expectations that the growth rate for the next 5 years for earnings. And again, this is based on 2025. If I go based off of this year's expected net income, which is almost 17 million, then the numbers are going to come down dramatically, right? We're looking at under $4. So again, it's a company, if you kind of try to make sense of the math here, trading at an expensive valuation, but at the same time, it is a company that's going to scale very quickly in terms of its net income because the margins are so high. All they really need to focus on is, okay, move a little bit away from research and development and marketing and SG&A, and all of a sudden they're extremely profitable with an excellent operating leverage. So it's a tough one. I would definitely say that it's a little bit of a tough one to value. But what I would suggest for myself is basically wait for a pullback because of how incredibly overbought it currently is, with an RSI over 73 and the MACD also pushing higher here. So you can see the MACD has been pushing up on the weekly time frame. It's even worse with an 83, 84 RSI. The MACD also incredibly overbought. So what I would tell myself here is to essentially wait for a bit of a pullback and then revisit the stock in the $12 and $13 range. So if you do see a bit of a pullback down to this level in the $12, 25% pullback, that's going to be aligned with this previous resistance acting as a potential support, then I would be happy to kind of revisit this stock once again to see where it actually makes sense to be a buyer for this company. But right now it's a little bit difficult to evaluate exactly because the growth rate is going to be higher. But again, free cash flows are positive. So based on those numbers, we're looking at sub 10 dollars per share in fair value. Earnings multiple wise, we're using 2025 net income growing at 40% or 35% makes the company somewhat fairly valued at these prices, even at a 25-30 times multiple. So if you average those two things out, we're looking at somewhere in the $10 to $11 range for HIMS and HERS to be fairly valued. But again, based on very optimistic estimates for the company long term. So keep a close eye at 12.55. We actually did not go over the balance sheet, so let's just quickly go over that here in just a minute. So when it comes to the balance sheet, the company has a negative net debt, so that's exactly what we want to see. The company has more cash than debt on the balance sheet, so that's good. And finally, if you come over to the current and the quick ratio, we're looking at very, very solid current and quick ratio, well over 2 and 3 respectively, and that's exactly what we want to see. So support level at 12.32. Down to another reasonable support level to keep in mind is going to be around here at $8. Those right there are going to be few levels to watch, and the resistance and the target, of course, is going to be at all-time highs at $25 per share. Right now, incredibly overbought, so I would be waiting patiently and be very careful for it to come down so it makes sense to be a buyer for HIMS and HERS. So hope you all enjoyed this video and a complete update on this stock here. Make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time, and the link to our Discord and Patreon is going to be down below. There is a 16% annual discount that's available until the end of this month. And again, I do apologize for not getting around this stock sooner, but hope you all enjoyed it, found it helpful. Make sure that you drop a like. 16% annual discount available until the end of this month. Happy investing, and I'll see you all in the next video.